A lot of the most successful limited companies in the UK didn't get there by waiting until they had enough cash to do everything themselves. You made the leap, you're incorporated, you've got a limited company and your name is on Companies House. Your business is real, separate, legal entity. And somewhere along the way, you probably realise that running a limited company comes with a different set of rules compared to being a sole trader. Different tax, different responsibilities, different opportunities. And one of those opportunities is access to funding structured specifically for a limited company. Because as a limited company director, you're in a stronger position than you might realise when it comes to borrowing. And today we're going to show you exactly why, what's available to you, and how to use it to your advantage. What makes a limited company loan different? When you incorporated your business, something important happened. Your company became its own legal entity, separate from you as an individual. That matters when it comes to borrowing, for a few reasons. First, a limited company loan is taken out in the company's name, not yours personally. That means that the financial activity sits on the business credit profile, not your personal one. Handle it well, and you're actively building your company's financial credibility, which opens more doors down the line. Second, because lenders are looking at the business as a standalone entity, they're assessing things like your company's turnover, trading history, and financial health. You've already done the work building that track record. Now it can work for you. And third, limited companies can often access higher loan amounts than sole traders or partnerships because the structure gives lenders more confidence and more to assess. In short, incorporation wasn't just a tax decision, it was financial credibility upgrade, and a limited company loan is one of the clearest ways to make use of it. What can you actually use it for? This is the bit that tends to surprise people, because the answer is broader than most expect. A limited company loan isn't tied to one purpose. Once the funds are in your account, you can use them for what your business actually needs. Here are just a few examples of what that looks like in practice. The tech consultancy that's won a 6-month project needs to hire 2 contractors immediately before the client revenue starts coming in. A loan bridges that gap cleanly. The independent gym that wants to expand into the empty unit next door, double its membership capacity, and finally run the classes that there's always been demand for, but the fit out costs are significant. The loan makes it happen now rather than in 3 years. The product business that's been approached by a national retailer in a genuine game-changing opportunity, but needs to increase manufacturing capacity fast to fulfill the order volumes. A loan is what turns that conversation into a contract. The professional services firm that's facing a corporation tax bill that landed in the worst possible time, right in the middle of a growth phase where the cash is tight. The loan keeps everything moving without derailing the bigger plan. 4 completely different businesses and 4 completely different needs. Secured or unsecured. What's right for you? One of the advantages of being a limited company is that you typically have a choice here, and it's worth understanding the difference. An unsecured limited company loan means no assets are required for security. It's faster, simpler, and works brilliantly for business that want funding without putting any on the line. With Fleximize, that goes up to £500,000. A secured limited company loan is backed by an asset such as a commercial or personal property, equipment, or similar. Because the lender's risk is lower, you can borrow more and often at a better rate. With Fleximize secured lending for limited companies goes all the way up to £1 million. The right choice depends on what you're borrowing for, how much you need, and what you're comfortable with. There's no one-size-fits-all answer, but a good lender will help you work through it rather than just pushing you to whatever's easiest for them. Building your company's financial future. Here's something worth thinking about that often gets overlooked. Every time your limited company takes out a loan and manages it responsibly, making repayments on time, using the funds to generate a return, you're doing something valuable beyond just solving the immediate need. You're building your company's credit profile. You're demonstrating to lenders that your business is reliable, well managed, and worthy of a bigger investment in the future. Think of it as a compound interest, but for your business credibility. The smart decisions you make today can make the funding conversation easier, faster, and often cheaper. A lot of the most successful limited companies in the UK didn't get there by waiting until they had enough cash to do everything themselves. They got there by using funding strategically at the right moment for the right reasons and building a track record that meant bigger opportunities kept showing up. That's not luck, that's financial strategy, and it's available to you right now. How Fleximize works with limited companies. At Fleximize, limited companies make up a huge part of who we lend to, and we've tailored how we work specifically around the way limited businesses operate. To apply, your company needs to be registered with Companies House, have been trading for at least 6 months, and have a minimum monthly turnover of £5,000. That's just a starting point. No years of audited accounts, no sitting in a bank manager's office. Every application is reviewed by a real person who looks at the full picture of your business, including its future potential, not just its past performance. Because we understand that a great business isn't always perfectly reflected in a spreadsheet. You can borrow from £10,000 up to £1 million depending on your needs and circumstances, with repayment terms up to 60 months. And our flexible features like top-ups if you need more, repayment holidays if something expected comes up, and no early repayment fees if you want to settle ahead of schedule are all built built in as a standard. The link to find out more is in the description below. Running a limited company is no small thing. You made a deliberate choice to build something serious, something with structure, credibility, and long-term potential. A limited company loan is one of those tools that lets you honour that choice. It's funding that matches the ambition of what you've built, and it gives you the means to take it where you've always intended it to go. If you found this useful, hit subscribe. We put out straight talk and business finance content regularly. And if you've got any questions, the comments are always open. Now get back to your business, and we'll see you in the next one.